Alrighty, what is going on, ladies and gentlemen? I hope you all have had a wonderful day. We're gonna be breaking down our futures contract per usual. We're gonna be looking at our 30-minute time frame to start things off. Per usual, just break everything from our 30-minute time frame down. Just kind of review what happened today. Try to give the narrative of what occurred throughout the today's price action, and kind of explain a little bit of why I like to give out both sides of the market. I mean, clearly, with today's price action, it's always good to know what the upside possibilities are as well as the downside possibilities, because for the last several days of the first couple trading days of the year, we've taken out both sides of the initial balance. So for those of you that are not familiar with the initial balance and what that is the first two 30-minute time frames of the day. So if you're looking at your first two 30-minute time frames here, A and B period, you can see we've taken out both the high and the low of those time frames. If I were to mark B's high here, and obviously this isn't going to be perfect, but if I were to mark B's high there and then A's low here, you would see that where those white lines that I just marked are, we've taken out both sides. We took them out to the upside, and then we took it out to the downside. We got much more extension to the downside than we did to the upside. Now, typically in a market that isn't as volatile right now, we are experiencing some volatility, which is good. It's great for range and trading opportunities, right? You always want to have good opportunities to make trades, but it does create a market where we do tend to take out both sides of the initial balance. Now, normally when you take out one side or the other, you typically can go with that side, and monitor it for continuation, right? So in this case, on the upside, we wanted to monitor for the continuation to the upside, and we had a little bit of that, and then we came back in, and then the market started to pull all the way back, eventually just kind of drifting lower for the good portion of the afternoon, and then we probe late in the evening, getting the other side of that market, right? So it was just a once again, very tough market to read. Um, just kind of two-sided trades for the most part. I only got involved in one trade today. Like I said, not taking many trades, trying to limit what I do, where I do it, and how I do it. And today, my only trade that I took was against the opening when we had pulled back. Trade was against the opening, against that set of single prints that was below us here at 47.37, and I had my stop just below 34.75. So I was long around the 40 level, and I was looking for us to get back up to right around the 46 level where point of control was being developed. Now that's always a key thing to know, points of control. So that was more or less why I got long there, was to fade the edge, come back into that area. And just with everything that the market had been telling me at the time up until M period, was that the market wasn't trying to run away to the downside. Now, obviously, that changed in M period once we got below and found acceptance below the open. We kind of just probed lower, taking back that set of single prints and then beginning to dip our toe into the next very large set of single prints from this trend day here, right? That's where we had that big spike up from the FOMC. And we have that large set of single prints that need to get filled down at 0875. So it's going to be difficult to fill that right away, but we pushed into it initially. Once again, we opened, I know I'm all over the place with this, but there's a lot to discuss whenever there's markets of this nature. But once again, we opened with a gap to the downside and filled that gap. We attempted to find acceptance below that price probe, and in yesterday's video discussed how if we could not find acceptance below the price probe, right, if sellers could not hold below 46.50 and get into these sets of signal prints and go and do kind of what we did in M period late today, then we would most likely rotate up to that non-wide point of control at 56.25 and then attempt our hand at the 71.75 high a day from yesterday, poor high. Okay, so we pushed up near it. We got that non-wide point of control in B period, took out our initial balance high. We were one time framing up. For those of you that don't know what one time framing is, that's when the market is setting higher highs and higher lows essentially. in each time frame, right? Each 30-minute time frame was taking out a previous time frame's high. That stopped after D period, right? So you had A period, B, C, D, and E period that stopped. We pulled back, we took out a previous time frame's low, and then we started to pull back and begin to eat into where we had a set of single prints. So let me get a clean chart here and kind of mark where this set of single prints were. So you can see where I'm highlighting right here. If you were to just pay attention to just the far right side of my screen, you'll see where we only had one time frame, excluding the previous day's range. We only had one time frame that traded between 49.50 and 54.50. Okay, then C period opened up and it got down into 53. So we had a set of single prints that acts as like an intraday gap. That's what happened. Pull this back up. That's what happened here on this day, right? It acts as an intraday gap to the upside. In this case, it was the same scenario, acted as an intraday gap to the upside. So it's something that you can lean against to take longs. And it worked out a few times, right? You could have initially taken a long around the 50 level and gotten a couple points out of it. You would have had to been quick. But obviously, once we stopped the one-time framing down and then began to stop the one-time framing up, and then began to one-time frame down, filling the set of single prints, you need to be more cautious on where you were taking longs at, okay? So we needed to become more cautious of where we were taking longs. And then at this point, when we had this pullback, we didn't know what the market was trying to do. We didn't know if it was going to go test the other side, and eventually it did, but we didn't know if it was going to test the other side. And because we were one-time framing down, you could have looked for something like an afternoon rally high, which happened in I period. That's when we have a pullback of some significant amount, get a little bit of relief, and then typically an afternoon rally high is where you can get short. And it had you shorted 47.51, right, using 52.75 as your out, right? You're not risking a whole lot there. You either use 52.75 or 55 as your out, and your target is going to be the day's low down here. Get rid of this. Your target's going to be the day's low down here at 37.75, or at least the open. Say you're somebody that thinks that we can get that. I mean, that's a great risk reward trade, right? You're shorting 51, risking 55, so you're risking 4 points to the upside, and you're looking to get all the way down to 39 or even 37.75, right? And obviously that trade worked out perfectly. I mean, you're not going to catch the full thing. Had you shorted it, you would have made money on the downside. And the reason you were looking for a short versus a long is because we couldn't hold trend up, right? Had we held trend up, this market would have continued to push up and gotten the high a day up here. That was not the case. We did indeed end up rolling over. Excuse me while I take a sip. So because we were one-time framing down and we were still inside the previous day's range, the odds of us taking out the other side of the initial balance were still all right. They weren't the best of odds, but it was still a possibility, and that's exactly what ended up happening. And then we probe late in the evening, filling that set of single prints down here at 34.75, and then beginning to get into that next set that started at 47.27. Okay, so that's basically today. In the best way that I know how to explain it. I'm sure there's a better way to explain it, but that's how I see it, right? We stopped the one-time framing down, couldn't hold trend. And then, obviously you could have taken longs, but you would have been paid very little. And the same thing on the short side, you could have taken shorts looking for that target, right? If you're getting long here, in I period around 47, your out is 43, right? Your out's going to be 43. You're getting long around the 47 level, so you're risking 4 points. That's not a bad risk reward trade either if your target is to the upside, but seeing how we had pulled back and we could not hold trend to the upside, and we were closer to the day's low versus to then to the day's high, and we had point of control being developed around here, right? It had been pulled down from 55 down to 49.50, and then it eventually got moved all the way down to 46. So point of control continued to move down. So that's another part of our market generated information that we had at hand, suggesting that price action would begin to get it more accepted down below at lower prices. So um, that's basically all we have today. Is today's high, an afternoon rally high, no wide point of control. We were 8 wide, but no wide point of control of any significance. We won't ignore it, but it will not be something I mark on my chart. So afternoon rally high, and then we have a price probe once again to the downside, and then today's low at 27. I'm gonna go ahead and mark those real. Alrighty, so there you have it. There's our destinations. Just got them pulled up on the screen for you guys. So let's go over both directions, right? You always want to have those directions on both sides because, I mean, clearly we can take out both sides of the initial balance, without any hesitation. So for our upside destinations, right, we have our price probe at 47.37. All right, that is our price probe. L's low 47.37. Sellers want to open below 37, find acceptance. Same thing as yesterday's scenario, right? They wanted to find acceptance. If not, then you'll trade up at 46, where we have an 8 wide point of control. I'm not marking on my chart because it's not that significant. But most likely you'll go trade up into the 51 handle. Okay, so if you find acceptance back above 37, you will go trade at 51. If you get above 51, then you will most likely go and visit 47.6650, today's high. Now on the downside, if we find acceptance below 37, 47.37, or even if we get above 47.37 and can't get back above 47.50, downside destinations are going to be as follows. 47.27, where the single prints start. They fill at 47.0875, and then we start getting into this lower distribution from that day, right? I marked this in yesterday's video. We start getting into this lower distribution. Highlight that real quick. I mean, it's still a good ways away, but it is a vacuum to that area. So if you're looking to get long against today's low, you're going to need a very tight stop because this market could easily liquidate. There's nothing to lean on here. The market could easily go down and target that 47.08 and get into this lower distribution. And then you have the day's low down here at 46.9675. And that is what we would call a poor low. We had two lows right there next to each other at 96.75. So if we get that, then we'll start encompassing or including that other weekly range that I was discussing in, or we'll look at here in just a second. But those are going to be your downside destinations for now. Clearly, we have more on the downside. 92.75 single print start there, and then they fill at 92.50. Then we have another set. Obviously, there were multiple trend days on the way up to these points. But for now, those are going to be the downside destinations. Now, just briefly, let's go ahead and look at our weekly time frame. It's always good to review these. I know it sounds repetitive, but you always want to have the most updated data for yourself, right? You want to be able to understand where these targets could potentially be. And so you can see now we're starting to get good extension below that other weekly low at 43.25. We're now sitting at 28.75. So I think if we start to pull back even more so, I think I'm going to encompass this or use this whole range here from this weekly low to this weekly high as all one range. And you can do that now, right? We're still forming that weekly balance as we're pulling back, right? Since this is the first time frame we've had a pullback on the weekly time frame. So you could go ahead and call it that, but I may just, if we do hold today's low come tomorrow, then I may just use today's low as our weekly low, balance low, and then the previous week's high, 39.75, as our balance high. But if we start getting below that, say that 27 level, then I'll start using this week here, and then it will become a 4-week balance instead of a 3-week balance. Okay, hopefully that makes sense, right? So then you would mark your channel, right? You would mark your channel as such, and you could do that, now, or you can wait until tomorrow after the non-farm payroll, because that could cause some type of volatility as well. We do have non-farm payroll tomorrow. All right, now let's go ahead and look at our daily. Okay. Daily, for the first time in a while, closed below the 20-day moving average. This does not mean that it's the end of the world. One day does not make a market, okay? First day in a while, we've closed below the 20-day moving average. Now we've been one time framing down 3 days in a row since breaking out of our balance up here, right? Once we got below 84.75, anybody that sold that, once again, they're in the money pretty good right now. Okay, so we could continue to pull back. There's nothing telling us that this market can't continue to one time frame down. Earlier, it was looking like there's lack of extension. We do end up with overlapping to lower value, so value not being completely lower on the day. But that does not mean that we can't open with a gap tomorrow and continue to push down and start getting these other daily lows, getting into that lower distribution from that big trend day down at 96.75. That daily low doesn't mean we can't target that and get to the rest of these daily lows. Now, we do have this gap up here, which was our premium gap, okay? So we do have a gap there. We have multiple gaps on the way down. I'm not expecting us to get these gaps. However, it could be a target on the way down. Your 50-day moving average sitting around the 45, 62, 47 level, or 62.50 on the way down. Not really expecting us to get there either. But, if the market doesn't like what they hear tomorrow, range and volatility and volume, they all could kick up and we could easily bring this thing down, right? Just as easy as it comes up is just as easy as it can come down. So keep that in mind. But one day does not make a market. Just because we close below the 20-day moving average today does not mean that that'll be the case going forward. We could just as easily take out today's low and then take out today's high all in one trading session. It's not impossible. We've seen that happen several times. That happened on this day, right? We took out that daily high and then we took out that daily low and had a rather aggressive pullback. Same thing could happen to the upside. We can take out today's low and to the upside. Anything and everything is on the table and we must be aware of that. So with that being said, ladies and gentlemen, wear your hard hats, keep them tight, right? Wear your hard hats, be safe out there, use stops. And once again, if you're looking for a great trading community, go check out camelbacktrading.org. Paul Asmar, once again, great mentor. Hope you all have a wonderful day.